Hello, and welcome to Old School Futures, your one stop shop for futures trading tips, techniques, and education. Before we go any further, please review the disclaimer at your leisure. In a nutshell, what it says is futures trading is risky and you stand a chance of losing all, if not more, of your initial investment. This training is for education purposes only and is not to be considered financial advice. All right, this is the first video in our basic education series entitled Trading Terminology. So excited you decided to join us today. My name is Roger. I'm a 35-year futures trader, husband, father, and recently just became a grandfather. Our goal here is to help you understand and get involved with the exciting world of futures trading. I started when there was no computer platforms. You had to order charts from a charting service and wait on them to arrive in the mail. Study them, call your broker, place your order. Although not ideal, it was still very exciting to get the weekly news report and see where your trade was and how it was performing. All has changed now with the internet and lightning fast data connections. It's excitement that never has to stop, with futures markets trading 23 hours a day, starting on Sunday night at 6 p.m. and going all week long until 5 p.m. on Friday evening. You can trade the Sydney, Australia market starting at 6 p.m. Eastern Time. Go right into the Asian market at 7, on into the London market around 3 a.m. And finally, the very fast moving and liquidity filled New York session at 9:30. Whatever demands you have on your time, there's always a session to trade when you have the time. First things first. Let's start with the terminology you'll hear me and other traders using to get you acquainted right up front. There'll be plenty of time for tips, setups, strategies, and lessons, videos to follow. Fundamentals. This term relates to the ability of a speculator to look at and analyze news and/or political and economic events happening all over the world and form opinions on how they will affect the market and which way it may influence its direction. Some traders trade around news events alone. The high impact events can have a very sudden and exciting effect on market movement. Trump says or tweets something that people perceive as having an impact on the world's or the economic economy, and it can move the markets drastically in a matter of seconds or minutes. The first thing I do every day before trading, check an economic news calendar and see what impactful event could be coming out today and make note of what time. Many participants exit the market for these events, and the asset's volatility can be huge at these times. We'll cover the reason for this in great detail in upcoming lessons and presentations. Don't worry, I know the best free resources for these event calendars and fully intend on sharing all of that with you. Technical analysis. This term, technical analysis, refers to the ability for someone to use specific tools, indicators, historical data, and many more resources to form an opinion as to market direction. Most traders in this camp believe that markets repeat themselves and use moving averages, candlestick patterns, trend lines, support and resistance areas, and other resources of this nature to predict market movement. We'll dive deep into many of these processes as we progress. Charts and trends are mostly self-explanatory, but I'd like for you to think about support as a temporary floor and resistance as a temporary ceiling, where price may tend to reverse. Just a few technical indicators worth mentioning at this time are moving averages, a line on the charts that smooths out price action. Weighted average. Most use the term volume weighted average price, or VWAP for short, where its smoothing line indicates an average where price has been weighted by the number of contracts that have been bought, long or short. And this will become a very important topic in upcoming lessons, as this price often determines fair value for both sides of the market. Volume by itself is a term used to describe the total number of contracts, long and short, that have been secured at a given time or price. We will definitely be diving deep into this topic as it relates to time and price. There are a significant number of other indicators available which we will touch on in lessons to come. Price behavior. There are many nuances to price behavior and signals. Just be aware that the futures markets are very influenced by leverage and the asset's expiration dates. Gaps are left in price action where no trading took place and can often be seen on a chart after a weekend or holiday and in between sessions closes and their respective reopenings. We'll also visit indicators that will suggest an asset's overbought and oversold condition. There's math involved here, and for those interested, we will visit this briefly as well. Divergence is a term that refers to an asset's price direction and its corresponding indicator moving in the opposite direction, often suggesting a potential reversal is near. And finally, confirmation, a very important term that suggests someone has identified more than one signal suggesting potential price action is likely to move a certain way. It's always best to have multiple confirmation signals before attempting to enter into any trade. You will see us doing this time and time again, whether through different time frames or multiple indicators as we progress. Risk management, quite possibly the most important term of all in trading. We will demonstrate how risk management is king when it comes to entering and exiting the market. Orders to automatically exit your trades or stop losses are the single most important insurance you can use in today's electronic world due to internet connections and possible electrical issues. Don't ever be caught trading any asset without a definitive stop order in place. You never know when something crazy and out of your control may happen. And when it does, you definitely don't want to be trying to scramble to save a possible losing position. We'll be concentrating on position sizing, trade diversification, and capital protection in lessons to come. These sound complicated, but start to be second nature as you enter and exit positions. You'll understand your exposure and your risk before entering into a trade. If you don't, you may as well just be gambling. That's definitely not what these lessons are about. My favorite topic, tools and platforms. This will be something that will be unique to each trader and their specific style. I've used everything from mail order charting to the most robust, highly customizable platforms on the market. Whatever you choose, it's been my personal preference to use things that are simple, easy to understand, fast, reliable, and repeatable. The software we will be introducing you to is simple and intuitive, easy to get accustomed to, and somewhat robust. The vision most people have of very successful traders is often someone sitting behind 6 monitors in a very lavish office wearing headphones deep into their analysis of the day's market activity. Fact is, some of the most successful traders in the world just trade using a single laptop or phone. Ocala, for example, at Ocala in QT on X, is well known for earning 6 figures just trading from his phone. Less is more sometimes when it comes to analysis and market sentiment. You will find what makes you confident as you progress, as I have. We're excited you've taken the first step in becoming a successful trader. Whether you are brand new or looking to sharpen your skills, we'll lead you down the right path. We'll inspire to trim years off your learning curve and teach you how to successfully navigate the futures markets through consistency, education, and building a rock-solid foundation. Please check out our website and many resources available there. Stop watching from the sidelines and take control of your financial future. Explore our courses, join our community, and/or our mentorship programs. We are committed to winning and watching you and your next chapter in futures trading. Thanks so much for joining me and taking the time to explore futures trading with us, and let us guide you into the journey with confidence, discipline, and purpose. Until next time, take care.